Hello traders, Gary Wagner here. Just after 2 o'clock in Honolulu, 7 o'clock in New York. It is Monday, 7th day of December, 2020, and this is the Daily Report for Gold and Silver. Strong moves in both gold and silver today, with gold moving up over $24 during the trading session. We'll talk about that when we pull up our price board, and then we'll look at some technical studies. Traders, although there's been notation that progress has been made on passing a fiscal stimulus bill prior to the end of the year, nothing is etched in stone. Nonetheless, the optimism prevails, and we saw that in movements of gold and silver today. Gold was up $26.40. This bases the most active February contract, which is currently at $1,866.40. Net gain of about 1.4%. Now, when we look at spot, it's not so much the change, but that's at $1860.40, so it's sitting about $6 below the February contract. Silver also had a nice gain, but not that much greater than gold, $24.66, up approximately 40 cents, or a net gain of 1.68% on the day. SLV, which is the ETFs that we have been following, that gained about 1.5%, or 34 cents per share, and is currently at $22.82. And then GLD had a gain of about 1.5%, and that is currently fixed at $174.89 per share after today's addition of $2.57 per share. And that was all within some dollar strength, which really provided light headwinds. Lastly, we'll take a look at Bitcoin. Bitcoin futures closed up fractionally higher, up about 0.4%, up $80 at $19,180 per coin. Let's take a look at our technical studies. The first chart that we're going to look at on today's show is a simple daily candlestick chart of gold. We want to note first the bottom that was formed at the 50% retracement. I've just circled that. And really what's most interesting about the way that we're viewing the market is, first, we can see this beautiful V formation. There's absolutely no doubt that we had a key reversal. That key reversal occurred at the 50% retracement, which was 1771.60. From there, we saw the market break above the 200-day moving average, and that is this lower line in red, very, very significant. Today's candle, we had another landmark kind of move because, as you notice, it opened below but closed above the 38.2% Fibonacci retracement at 1847. Short-term resistance, we've got to look at 1882. That is based upon the 50-day moving average. Above that, of course, is going to be 1900. That's more a key psychological level mark. And then lastly, the 100-day moving average, which is still inverted. By that, I mean, when you have fully bullish market sentiment, you have the longest term, meaning in this case the 200-day, and that would be followed by the 100-day and then the 50-day. That's what we had up here. However, now we have this inversion where the 100-day is still above the 50-day. We would need to see this 50-day cross back above the 100-day, and we would have a fully bullish market sentiment on all three moving averages. A couple of Western indicators that we do want to look at when we are looking for market sentiment as it shifts from bearish to bullish are the RSI along with the MACD, moving average convergence divergence. And that's what I'm looking at right now. That is at the bottom of the screen. And we can see that we are certainly in an overbought scenario right here as it came down, and it will lag behind current pricing as this market moves higher. But you can see it was certainly overbought as we went in the beginning of December. And traders, we talked about various short-term resistance levels when we look at our daily chart. However, this weekly chart really gives us a clearer picture of the major points we could reach. The first one is the 23.6% retracement. That comes in at 1941. And of course, 1900 is really the next psychological mark that we need to see gold pricing take out. And there's one other chart we're going to want to look at, which is our daily Henkin-Ashi to determine strength of trend. We can see the bottom and pivotal candle that came in. That would be, of course, a small green-bodied candle right here. That was followed by 3 trading days with the absence of a lower wick. And simply what that means is that at no point during the trading session did pricing go below the midpoint. That cannot be said for today, but we had such a huge move with a large price range. We've still got a nice body size. However, we do have the addition of a lower wick. We're not so concerned about the upper one. It is the lower wick, which means that it traded below the midpoint, but it had an excellent recovery. That tells us that the momentum of the trend is still strong, but we have to watch carefully to see if it begins to weaken. What we would like to see is the upcoming Henkin-Ashi candles during this week contain no tail. Maintain your long position in gold futures, gold forex. We will look to move those stops up within the next 48 hours and send out an appropriate trade alert by SMS text message along with an email. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.